Hey, thanks for tuning in to this segment of our credit and credit scoring video series. My name's Kurt Jackson. I'm a certified mortgage planner in Liberty, Missouri. Been in the mortgage business for a little bit more than 17 years. In this segment, we're going to share 7 things that you can do to help your credit score. Now, we got these from Liz Pulliam Weston. She writes on MSN.com. That's MSN.com. Her name is Liz Pulliam Weston. She's great. You really should try to read her stuff regularly. She has some great. She's a huge consumer advocate and shares some pretty phenomenal information in her column. But before we continue, I got to give you our disclaimer. We're not attorneys. Information that we're given in this is not to be construed as legal advice. In fact, the information given in our video series is designed to alert you to different aspects of your credit and your credit bureau that you could possibly consult with an attorney on to get things corrected. You know, unclear language isn't the only uncertainty surrounding the new score. We talked about that in a previous, we started talking about the new scoring model that's coming out in 2008 in an earlier segment. But it's also hard to predict how long it will be before that the new FICO 8's in widespread use. It appears that Experian and TransUnion will likely offer FICO 08 to lenders by spring of 08. The third bureau, Equifax, says it's not going to offer the score until later. I think there's some litigation between some things there before they will. But to hedge your bets and make sure you get the best possible score regardless of the formula you use, here's 7 tips that Liz threw out, and we think they're great. We want to share them with you. First of all, scour your credit reports. Your credit score is derived entirely from the information on your credit reports at the 3 bureaus, and a single serious error can cost you big time. You're entitled to a free annual look at your credit reports from www.annualcreditreport.com. It's listed there on the screen. Dispute any accounts that aren't yours or any negative entries that are more than 7 years old or 10 years in case of a bankruptcy. And watch out for imposter sites, folks. There's a lot of other sites out there that are trying to draw you in, but that's the one address that I know of that you're able to get the new free annual credit report. You'll be able to do that from each of the 3 bureaus every year. It's a new thing that passed a couple years ago. Don't be late. Skipping a single payment can knock your score from prime to near subprime territory overnight. Make sure all your bills are paid on time. Consider setting up automatic or recurring payments from all your credit accounts. Watch your balances. The less of your credit line that you use, the better. Try not to use more than 30% of your credit card limits at any time during the month. Using 10% or less is even better. Remember that the credit bureaus and your credit scores don't distinguish between balances you pay off and those you carry month to month. The balance that's reported to the bureau is typically the one that shows on your most recent monthly statement. If you're in the habit of using a big portion of your credit limits because you travel on business or are chasing credit card rewards, consider asking for higher credit limits. You could also make 2 payments a month on each high-use card to lower the balance that's reported to the bureaus. To make this work properly, you'll need to make 1 payment just before the statement closing date on the account and a second after the closing date but before the due date. If you fail to make the second payment, you may be reported to the bureaus as being late. Nice, huh? But that's something that you can do if you're charging a lot on your credit cards. Don't close accounts. We talked about this earlier. Fair-Isaac has made it clear that closing accounts can never help a FICO score, and it may hurt it. With FICO 08, that's even truer. The new scoring formula wants to see evidence that you're actively and responsibly using credit, so you get more points for having open accounts in good standing. Conversely, having a higher proportion of closed accounts can hurt you more. Keep your accounts active. In the past, the biggest risk from letting accounts be inactive was that your lenders might close them, thus dinging your scores. Now, simply having too many inactive accounts could count against you in some circumstances. Once again, the new scoring formula is looking for evidence you can responsibly manage credit. Consider keeping your oldest and highest limit cards active by charging something to them each month, making sure they pay the balance in full, of course. Touched on this in a previous one. You can piggyback the right way. You can still benefit from someone else's good credit under both the old and new FICO formulas by being added as a joint account holder to a credit card. In most cases, the other person's history with the card will be added to your credit reports. As long as the account remains in good standing, it can help your scores, but being added as a joint account holder involves more risk. You're now jointly responsible for the debt, whereas as an authorized user typically would not be. But remember, the authorized user ability to use that on the credit to help your credit scores going away. So you're now jointly responsible for the debt, whereas an authorized user would not be, as I said. Getting taken off the account isn't easy either. A phone call from the primary cardholder might remove the name of an authorized user, but you often can't be removed from a joint account until it's closed. Think about it from the lender standpoint. If they've got 2 people that they could go after rather than 1 if the account goes bad, why would they let you off of that account? Consider an installment loan. There's two main types of credit: revolving accounts that allow you to build up and pay down balances, and installment loans that typically have fixed payments that require you to pay down your balance over time. Credit cards and lines of credit are examples of revolving accounts, while auto loans and mortgages are considered installment loans. The FICO formula has always rewarded folks that have successfully managed both types of credit, which is why getting an installment loan was often recommended as a way for people with troubled credit to rehabilitate their scores. The new scoring formula is even more sensitive to the mix of credit types people have and use. In the past, people were able to get and keep very high scores using only credit cards. It's not clear if that's going to be true under FICO 08. Now, that doesn't mean you should march out and get a loan you don't need. Loans you've already paid off will continue to help your scores as long as they're still on your credit report, and many lenders continue to report closed installment accounts for 10 years. But if you're trying to improve a low-scored installment loan, is likely to help you even more under FICO 8 than it did under the classic FICO score. So those are just some tips that we wanted to share with you. Once again, your credit is extremely important, and managing and maximizing that credit score is something that you should really focus on. We can help you with that. We can help you help yourself with that. We also provide access to a law firm that is very affordable that can help you with that. The amount of misinformation on a credit report is staggering, and it can really damage your lower your score. And in today's environment, it's so important to have your scores maximized. So this is some money that would be well spent to make sure and start early, get that all taken care of, so you can get the best rates and terms on your loan. For right now, this is the last video in this series, but as new information comes out, we will be adding to it. If you would like to be kept up to date on when we do add more, just on the screen there you'll see our contact information. You want to make sure you email Kurt on this one because I'll be the one doing those updates. So if you would like for us to keep you in the loop when we do new videos, any additional videos on this, we would be happy to do that. If you're thinking about buying a house or have a house that you're going to eventually need to refinance, I highly recommend you getting in contact with us, and let's see if we can't get you set up on a way to make sure that you can keep your credit scores maximized. Whether you want to do it on your own or through the service that we have, we can help you either way. But tell people about this if you felt this was valuable. The best thing is free. We're not going to hound you or anything. But if you do want the help, or someone that wants some help, we're happy to do that. So thanks for tuning into our video series. If you've got any comments on topics that you'd like to know more about that you think we might be able to help you with, we're happy to take those into consideration and maybe do some new videos in the future. We found that this is an easy way for people to get the information that they want. We've tried to go the route where we just write it, but people don't necessarily like to read, so we found that the video series is really a great way of going about it. So keep that in mind, and once again, thanks for tuning into our video series. And if you would like to know any more, contact us. The information that's listed on the screen. Have a great day.